In the opening lines of Franz Kafka's The Metamorphosis, a traveling salesman named Gregor Samsa wakes up one morning to find he has transformed into a paralyzed, monstrous insect. Recently, the Indian rupee experienced its own Kafkaesque morning. The currency fell past the historic low of 100 to the US dollar, finding itself completely immobilized. The freefall was so stark that the Chief Justice of India literally compared the currency to a cockroach. Prime Minister Narendra Modi recently speculated that he might be a non-biological being. Yet the currency managing his economy has taken on a distinctly biological, vulnerable form. The government had long promised that India was accelerating toward becoming the third largest economy in the world. Instead, the depreciating rupee has dragged that ranking down to 5th place. How does a country widely pitched as the world's next great economic engine suddenly find itself untouchable to foreign investors? In 2026 alone, foreign institutional investors pulled $26.3 billion out of India. To understand why capital is fleeing, we must look at the math dictating bond yields. This chart compares the two main forces acting on foreign money in India. The first bar is the debt interest spread, the actual interest investors earn, sitting around 2.5%. The second bar is the rupee's depreciation rate, which is climbing past 5%. Because the currency is losing value faster than the interest is accumulating, foreign investors are mathematically guaranteed to lose money by keeping it in India. Other nations are adjusting to keep capital. Japan, for instance, has successfully raised its interest rates, bringing its 10-year bond yield up to 2.75%. India cannot simply raise interest rates to match. Higher borrowing costs would crush domestic consumption, which is already under severe pressure from high inflation and the rising costs of everyday essentials like cooking gas cylinders. Caught between high inflation at home and guaranteed losses for foreign money, the rupee is stuck in a mathematical trap, unable to get out of bed. The government has heavily promoted India as a burgeoning tech superpower. The reality is that Indian companies are largely assembling parts, missing out on manufacturing the high-value AI chips and computing infrastructure driving the global market. This graph tracks 2026 global tech market outcomes. Because they manufacture semiconductors, Taiwan's market grew by 40%. Over that same period, India's market shrank by 7%. Following recent crashes, 0 Indian companies remain in the global top 100. This profound lack of industrial foundation is the culmination of what analysts are calling a decade of disasters. The initial shock goes back to November 2016, when the abrupt demonetization of high-value currency notes permanently crippled the purchasing power of the Indian working class. By substituting long-term industrial planning with short-term political optics, the core engine of the economy was completely hollowed out. Much like Gregor Samsa, the traveling salesman, Prime Minister Modi recently set off on a critical diplomatic trip to Norway immediately following state elections. He was the first Indian prime minister to visit the country in over 40 years. The objective was the Norges Bank Investment Management, which controls the world's largest sovereign wealth fund at over $2 trillion. Just before the trip, that massive Norwegian fund announced it was blacklisting and dumping its stake in Adani Green Energy, citing concerns over gross corruption and serious financial crime. Norge's decision followed a $275 million settlement by Adani regarding a civil suit brought by the U.S. Securities and Exchange Commission. Global capital demands transparency. When a government acts as an intermediary for deeply compromised domestic monopolies, international institutions will quickly quarantine their exposure to the entire country. Abroad, the prime minister usually relies on the safe, cheering crowds of the diaspora. But in Norway, he was confronted by a highly critical local press. Reporters bypassed the investment pitches and instead asked direct questions about systemic democratic backsliding, the targeting of minorities, and the suppression of press freedom in India. Faced with these questions, no words emerged from the prime minister's throat. Like the paralyzed insect in Kafka's story, he found himself unable to communicate. Former Finance Secretary Subhas Chandra Garg recently admitted that the promise of a $5 trillion economy is slipping out of reach. Driven by optics, bogged down by cronyism, and abandoned by global investors, the currency continues its quiet fade into the dark.